Viewers, I'm sitting with Amin Noorani, a very experienced chartered accountant from ABN Corporation. We're going to discuss a very important topic with Amin today from the tax perspective. Amin, how are you?
I'm good.
Thank you for joining us. Submitting a tax is a one aspect, but what is exactly the red tag items?
Zia, very important that these days, as you know, that it is very easy to file the tax returns. You have the software, your accountant has softwares, you file your return electronically and you get the immediate assessment. As soon as you get the assessment, you feel that my tax is over.
Done.
It is not like that, because these days the CRA has such a sophisticated software, and there are some kind of a parameters in that software which immediately picks up the items which is red flag, and that's what we are going to discuss about today.
Okay.
Right? So the most important thing is your income threshold. So now it is by default, if you are in a higher bracket of income, let's say a couple of $100,000, $200,000-$300,000,
Yes.
you are making it, the chances of being audited is much higher than if you are making $40,000.
Okay.
Because CRA, they are in the business of making money out of the taxes, and if they see that if you are making that kind of a money, they can get more money out of you. As simple as that.
Exactly.
So their chances of the audit is much higher on that one. Now these are the things which we will discuss, which you have to be very, very careful about it. It doesn't mean that you are not going to claim those things, but you have to be careful. It means that you should have a proper supporting documents for these items. The first thing is never try to hide your income. These days CRA gets the independent verification or the reporting of those incomes, like a T4, like a T4As, T5s, T3s. These are being directly reported to CRA by your employer or by whomever you have made the money out of, right? So that's very important that you report your income properly. Very, very important. Otherwise CRA have the information, they will double check it, and if that income does not match with your T1, they are going to come after you. So that's another thing. They also have the check if you have claimed anything extraordinary expenses.
Yes.
You are going to be red flag, right?
Okay.
So if the expenses are legitimate, make sure that you have a proper supporting of it. I'm not saying that do not claim it, because these are the legitimate expenses. Absolutely, you are going to claim it. Make sure that you have a proper documentation on that one. Charitable donation, that's another item. Definitely, even if you have filed your taxes electronically, they are going to come and they are going to check the charitable donation. In the past, there were so many scams going on. The people have just got the receipt from the company, from non-profit organization, and I'm sure that you are aware of it, right?
Of course. Yeah.
And CRA is going to audit those charitable donations, right? It is absolutely important. You also know that last 3 years they are after your foreign assets. Wherever, if you have any foreign assets, any part of the world, now they are making an integration with those countries.
Yes.
So you have to file 1135, and if you have not filed your 1135 on time, it means there's a $2,500 penalty on it. So ensure that you file your 1135. If you have any assets more than $100,000, any part of the world, you report that assets. Otherwise, when you are going to bring the money from any other country, they are going to be all taxable. And you know that Canada, it's an immigrant country. So when you migrate to this country, you usually have an assets before you migrate. Those assets are not taxable, right? So if you report those assets into 1135, then these assets are not taxable. And it is very common that the accountant says, or many people advise these people, if they do not go to the professionals, there is no need to report these assets. Absolutely, you have to report these assets, because there is an advantage on it. Because when you bring the money, it is non-taxable. If you have made money, that money was made before you have been immigrated. Another thing is that if you have started a business, a small business, and that business has gone under, there is another opportunity available that is called allowable business investment loss. You can claim 50% of that loss, you can claim under your personal income, and that is legitimate expense, but guaranteed you are going to get an audit if you are going to claim that. So I'm not saying that do not claim it. Make sure that you have a proper documentation of that one. It's a great opportunity. If you have made some losses in your corporation, you can even claim under your personal income, right? tuition credit, right? That if you have claimed for the tuition credit, the CRA is going to ask for the supporting documents, right? It is very important. Now you have a small business, so there are some expenses which you claim. So as soon as you have a small business, and if it is the nature of the business is a cash business, for example, if you have a beauty salon or an auto business or a restaurant, there's a lot of cash involved in it, right? So that is a red flag. CRA wants to ensure that you have reported all the income. Now in the small businesses, you also claim as a home office expenses, because if you are running the business from the house, right? I've seen many cases the taxpayer has deducted 50% of their home expenses against the business. That is not acceptable, because you are living in this office. 10, 15, 20% at the max you can claim, because that is legitimate, because you are working from a home, you are using the home facilities. So there are some expenses which you can allow. 100% use of the vehicle, that is absolutely next to impossible. That if you have a vehicle and you are using 100% of that vehicle for your business, right? Definitely you are using for your own purposes as well. Meals and entertainment is another item. So meals and entertainment is very confusing. It is the only expense which you have spent on your client to create a business. That is only legitimate. If you are spending the meals and entertainment, people have the idea that whatever the meals and entertainment they can do for the family or with their friends, they are not tax deductible. And only out of that 50% is tax deductible, even if it is for the business purposes. Because one of the reasons is because the 50% of the meal they believe that you are spending on yourself.
Exactly.
So that is not tax deductible, right? So these are the few items. Another thing is the mathematical error. If you have made any mistake in creating the tax returns, because what the CRA does, that whatever the information you have provided, they are going to process the separate tax returns at their own end, and if their numbers does not match with yours, then it means that there's made it, right? Signature also very, very important, that if it has been filed electronically, you provide the signature to your accountant, or if you have prepared it manually, make sure that the return has been signed. If the returns has not been signed, they are going to come and they see that if something, maybe there is some fishy things going on. So these are some of the tips. There are many things in which you have to be careful about it, but these are specifically which come right now. I'm thinking of it, that I think that taxpayer should be.
No, great. Thanks a lot. I mean, thank you very much. I know the time is quite tight, and then we can't explain everything. But again, once again, thank you very much, viewers. It's very important that if you need more information from this point onward, you can contact Amin directly. You can go visit him. Trust me, you can find a lot of good information and in-depth information. If you got information with the last 5-6 minutes, so imagine how much of info you can further get from Amin if you meet him in person. We'll go on a break. Stay with us.